webinar today, and we'll just make sure that we put this up on the producer portal as well. So if you have any colleagues or agents that you work with that were unable to join for today's session, you can go ahead and just point them to the recording that we will put up there. If any questions come up or arise during the webinar, please feel free to drop them into the Q&A or the chat. I will keep an eye on both of those as I'm going through the materials and the short platform demo. And we'll make sure that we get any of those questions answered that folks have. So to kick off, first, I just want to thank everybody again for joining. We're incredibly excited. I know a few of you were on the webinar. It's been, I think, about a month now, where we talked a little bit about the Liberty Mutual products that we've recently added to the platform. And I think there are a few folks that may have heard a similar presentation to this. What I'd like to do today is give you an overview of where we're at today with Liferaft. We're not going to spend as much time on all of the product details, but we will go through them pretty quickly. I want to walk you through the new producer portal, what the application looks like, and then actually spend a good amount of time talking through a few customer use cases and case studies that we've seen where our products and versions of a bundling strategy have actually been incredibly successful. And so that, I think, hopefully should take it from, the product details into how do we actually apply this as we're talking to our clients and thinking about whether Liferaft is a fit. And if it is a fit, how we actually may think about the products that we want to be offering them and what the value is for them. So because everybody is familiar with Liferaft, we're going to go ahead and skip the overview. But what I want to do is really start with how we as a company think about the products that we design and where we think the value is. So as we all know, the cost of healthcare continues to rise. And with recent potential legislation, what we're going to find on the major medical side is that as the Biden administration looks to make it easier for consumers to compare different metal tiers of major medical, I think the end result from an industry perspective is that every level of major medical is going to start to look similar, right? We all know that a lot of the bronze level plans look pretty similar already, regardless of the carrier. But I think that's going to continue to be the case. And over time, we may find that they start looking even more similar. And the end result of that is that as these costs continue to rise, but major medical starts to look more similar across carrier, the implication is that your consumers are really going to have risks that are associated with major medical coverage, right? Even the best major medical plan is going to leave you open to potential risks, right? And a great example, we talk a lot about, we're going to continue to talk about bronze level plans, but an interesting kind of point here, I was talking to a close friend of mine who works for the federal government. They've got a fantastic health plan, but even with that health plan, copays are low, premiums are reasonable. It's actually a $0 deductible plan with about a $12,000 out-of-pocket max. And everything other than hospitalization is actually a copay, and hospitalization is a 20% coinsurance, right? And so even within these best plans, there is a significant amount of risk that is held by the consumer. And so I think the end result of that, as we think about where there are opportunities to build products, supplementary products can play an important role in every client's portfolio. But it really has to be the right set of those products that are coming together to help give your client the right coverage. And as we start to look at case studies and look at bronze and silver and gold level plans, after running the numbers, it's become really clear that you can actually pair a bronze or a high deductible health plan with the right supplementary package alongside it. And what's going to happen is you're actually giving your client a more affordable monthly option, right? But you're also able to really help reduce some of the key financial risk that's underlying. Oops, sorry about that, everybody. You can reduce the underlying financial risk. And that's really how we think about the platform that we've already built, the products that we have today, and also which products you're going to find down the road from us. So to take a step back, what is the Liferaft platform? As we've talked about several times before, there's really two components. There's a routine care solutions and there's serious medical event solutions. Now, the routine care solutions, those really, especially with those clients on a high deductible health plan, these are going to be incredibly important to help your clients actually manage the day-to-day costs that are associated with utilizing healthcare, right? Something as simple as an MRI when you're on a high deductible health plan can oftentimes be far more expensive if you utilize your health plan versus if you were actually just doing a cash pay rate. And that's where the health savings account and that debit card, as well as our provider partnerships, are coming into play. These are going to give your clients the ability to both save on a pre-tax basis to utilize for those health funds with that HSA, and then pay a cash pay pre-negotiated rate with a provider partnerships that we're going to have across the country, so that they can go get that MRI or they can go to that urgent care and not be faced with a massive bill associated with their deductible on the HDHP. But today we're going to talk about the serious medical event solutions. And that's really another way to think about the insurance products that we have, right? The serious medical event products are all designed to offer payouts to your clients for specific key risks that are underlying in a major medical plan. And so if you look at most major medical plans, particularly those high deductible health plans, there are a few different ways that your client is going to have serious financial exposure if they have to utilize their healthcare. And that is where we've designed our products to help shore up that coverage. So when we talk about serious medical events coverage, there's really three components to it today. There's the accident supplement, there's a hospital supplement, and there's a critical illness supplement, right? So at a high level, at the accident supplement, the product that we have provides a reimbursement indemnity for costs that are associated with an injury that is related to an accident, right? So think of this as your client ends up in a car accident, breaks their leg, requires surgery and a lot of follow-up to make sure with physical therapy and MRIs. This product is going to offer a pretty comprehensive coverage for inpatient and outpatient services. Your client will submit a bill for everything that they paid, and they will get reimbursed up to a cap. And so when I think about the value for this product, it is really for those folks where if I was in a hospital, if I was in a car accident or any other accident, and I was going to be in the hospital for a significant period of time or even a short period of time, I am going to be paying out of pocket. And the accident supplement is going to help cover that out-of-pocket cost, ideally all of it, but at least a portion of it, depending on the level of coverage that you choose. Now, the second plan is a hospital supplement. And this is a product, we've had this since November of last year. We've talked to everybody about this, but this is going to offer either a daily cash indemnity or an admission and daily cash indemnity benefit to your client if they are hospitalized due to accident or sickness. Now, with accident, I actually think our accident supplement is going to be better coverage for your clients, but the hospital supplement will play a critical role for any hospitalizations and inpatient hospital stays that are related to sickness, because your accident plan won't cover that. And so again, this product is likely not going to cover 100% of a deductible, but it is going to ensure that your client at least has some funds available to help reduce or defray that out-of-pocket cost that is going to be associated with an inpatient hospital stay. And the last one is critical illness supplement. So when we think about, you know, something that is going to lead to your client hitting their out-of-pocket max, not just this plan year, but most likely next plan year, it is a serious critical illness diagnosis, right? The average cost of treating cancer, certain forms of cancer today, for the first 2 years, it's a gross cost of $200,000. So if I have an out-of-pocket max of $8,500, I can be pretty darn sure that I'm going to be paying $8,500 for at least the first 2 years after I get a diagnosis. And our critical illness product is meant to pay your clients an indemnity or a lump sum cash payout upon that diagnosis. Now, there are some states where you will be able to offer your clients just cancer care, but we have a nationwide product through Liberty that is going to be comprehensive and will cover cancer. It will cover cardiovascular illnesses, including heart attack and stroke, as well as renal failure and organ transplant. So, you know, when we think about each of these lines of coverage, they are really meant to help, again, cover or reduce the out-of-pocket exposure where it is likely your client is going to be hitting their out-of-pocket max. Any questions at this point? I don't think I see any in the chat or the Q&A. Great. We'll keep going through then. So let's talk about each of these supplements that we have today and dive into the product details just a little bit. Again, we're not going to spend a lot of time going through each one. What I'm going to do is really focus on, I think, the key points and the key areas of strength for each of these different products. So let's talk about hospital supplement insurance. You know, before last month, we had one product through AIG. We now have an additional option that is available. Again, that is going to be nationwide, available in all 50 states and DC. As a reminder, hospital supplement is designed to pay your clients either a daily cash indemnity with AIG, so it's the same payout every single day that they are in a hospital, or an admission fee followed by a daily cash benefit for every additional day that they're in the hospital through Liberty Mutual. Now, I should mention that all of our products are going to be guaranteed issue products, right? So the last thing that we want to do is create products where you have to take your client through an extensive underwriting process during the application, and then at the end of it, tell them that they actually were denied coverage. And so what you're going to see through all of our supplemental products is that they are all guaranteed issue. They may be age rated and also tobacco use rated on critical illness, but they are always going to be guaranteed issue. Now, two things to mention here. AIG guaranteed issue, age rated, that is for folks that are 18 to 60 years old. With Liberty Mutual, that issue age is going to step up to 65. So for folks that have slightly older client bases, you're probably going to be looking at the Liberty product if they're between 60 to 65. With AIG, what you're going to see is that the benefit is really meant to scale with the severity of the hospitalization. So what do I mean by that? When we look at the admission cap on the AIG product, it's actually 365 days, and that is a lifetime cap. But if you have clients that are diagnosed with serious sicknesses and are in the hospital for 90 days, the AIG product will pay them the cash benefit every single day for that 90 days that they're in a hospital. Liberty is going to be a little bit different. There is a 31-day cap on admission with a 60-day cap per year, but that product will renew even if your clients are utilizing it. So let's look at the benefit summary or pricing and the actual benefits that are available through AIG. So with AIG, there are going to be 3 tiers of coverage: basic, preferred, and premium. The basic is going to offer a $200 a day cash benefit to your clients. The ICU will always be 2 times the hospital benefit for this product. Preferred is $350, premium is $700, $500 a day. What we do is we try to design our products to maximize our benefits so that your clients are being delivered meaningful payouts, but also design and file our products in a way that we can keep that monthly cost as low as possible. So when you look at that $200 a day coverage, if you have a client that is 18 to 39 years old, that is $5.01 a month. Even at the highest end, for $500 a day, if you are in the older age bracket, it is going to be $25.42 per month. So when I think about, if I have a bronze level plan and I were to get pneumonia that lands me in the hospital for 3 days, in most states, a 3-day hospitalization, the gross cost of that is going to be between $7,000 to $8,000 at a nonprofit medical institution. So if that is the gross cost, again, I am likely going to be paying, if not my entire deductible, a big portion of it. This product is at least going to help reduce that out-of-pocket exposure. And if I was to compare it to a silver level plan, and let's say the premium coverage, what is likely going to be the case is if I added premium coverage for $1,255, which is going to be less than if I move to a silver level plan, I'm going to see that my net out-of-pocket exposure after I receive my $1,500 because I was in the hospital for 3 days is likely going to be lower than most silver plan deductibles, right? And so again, when we think about delivering value to our clients, we are giving them an option that is improving coverage, and it's doing it in a more cost-effective way than actually moving them up on the major medical scale. So let's talk about Liberty very quickly. With Liberty, as I mentioned, there is an admission benefit on this product, $500 upon admission that is payable once per year. And then your client will be paid $100 per day after that admission benefit with a 31-day cap, max per hospitalization and a 60-day cap per year. Now, ICU here is going to be 2x as well. I think there are two really nice things about this Liberty product. One, there is that small emergency room benefit that's built in, $100 per day, payable 2 days per year. The other thing is that this product is actually not age rated. So it is $12.69 for an individual, regardless of their age, between 18 to 65 years old. So again, for those slightly older clients, this Liberty Mutual product, I think, is a really fantastic option. Now, with both products and all of our products, there is always going to be an option for individual coverage and family coverage. Great. So let's talk about critical illness. I'm going to spend most of the time talking about Liberty Mutual today, which is going to be a more comprehensive critical illness product. Now, we are going to be launching another CI product with AIG that is going to be focused very narrowly on cancer and cardiovascular illnesses, but that will only be available in the state of Florida. So let's talk about Liberty, because that's available again nationwide. As a reminder, all of the products are going to be guaranteed issue. Now, CI or critical illness is going to be age and tobacco use rated, right? So there are smoker and non-smoker rates, and then they're going to be age rated. Again, this product, 18 to 65 years old on the issue age, and it will continue to be in force until somebody is 70 years old. Two things that I think are really, really interesting and attractive about the Liberty product for those of you that have sold CI in the past. Number one, the benefit structure, right? So as we talked about earlier, what is really the use case for a product like this for your clients? If your client gets a critical illness diagnosis, again, particularly focusing on cancer right now, they are going to hit their out-of-pocket maximum with almost 100% certainty for at least the first 2 years after a diagnosis. This product will pay them a lump sum indemnity, a lump sum cash payment upon diagnosis. And I think the really nice thing about the Liberty product is there is actually a recurrence benefit that is built in. So when we look at the benefit rates, you're going to see there's a benefit rate and there's a policy max. So your client, if they are diagnosed with a critical illness, they are, let's say cancer in this case, they're treated, they're in remission for 180 days, and that cancer were to recur, they would actually be eligible to receive that lump sum benefit again to help cover the next 2 years of treatments. So that can be paid out a total number of 3 times. So there is some flexibility built into that product on the recurrence. I think the other thing I want to draw attention to here is the pre-existing conditions, right? So a very big question, rightfully, from clients is, what does the pre-existing conditions clause look like? I had been diagnosed with cancer in the past. Can I still buy it? I'm worried about it coming back. Most products are going to have a wait period, right? We have I think a pretty market wait period, which is 12 months, but they're often going to have a look back period, right? So within a period of time from when you are buying the policy, have you been diagnosed with a critical illness? And most products out today are going to have somewhere between I've seen 12 to actually all the way up to 60 month, a 5-year look back period, right? With Liberty Mutual, there is a 6-month look back period. And so again, when thinking about our client bases and where this product could be valuable, I think the fact that there is a short look back period really increases your ability to offer a product like this to your clients that may have critical illness top of mind because they were diagnosed with cancer and have been in remission for the last 3 years, but it's been really hard for them to be able to find coverage. So I'm going to go ahead and skip over AIG for today. If anybody has questions or would like to learn more about AIG specifically, please just shoot me a note and I will make sure that I send over some more details there. And again, that product is only going to be available in the state of Florida to begin with. So let's talk about the Liberty product. Couple of things here. As you may remember, there is the initial diagnosis payout, and then there is a policy max that has to do with the recurrence benefit that is built in. There are 3 levels of coverage here as well. There is a basic at $10,000, a preferred at $20,000, and a premium at $30,000. The policy max is always going to be 3x that initial diagnosis. It is going to cover, cancer, cardiovascular, so heart attack, stroke, coronary bypass, as well as renal failure and organ transplant. Again, there are going to be individual as well as family options that are available here. This is an example rate table for a non-smoker for the $10,000 benefit. For your clients that are 40 to 44 years old, a $10,000 benefit is going to run $10.86 a month. So again, really trying to push that coverage up as much as we can, but also keep those rates as low as possible. And we'll talk a little bit about a couple of, I think, rules of thumb that are helpful when figuring out, hey, where, I think my client needs the critical illness product. Where do I actually put them in this coverage tiers? And we'll talk about how to think about that in the use cases in just a few moments. Great. So let's talk about the accident supplement that we have. So the accidental supplement, or the accidental medical expense plan, again, guaranteed issue, available through Liberty Mutual, backed by Liberty, and available in all 50 states. This product is going to offer that reimbursement indemnity payout for clients up to the AME benefit amount. So you'll see that we have 4 tiers of coverage here, $2,500 up to $10,000. 2 really, I think, key things to keep in mind with this product that I think make it really interesting for our clients. 1, there is no issue age cap on the accidental medical expense product. So if you have a book of Medicare clients, they can benefit from the accidental medical expense because there is no issue age cap like the critical illness and the hospital. The second big thing is you'll see here under the AME benefit amount, there is a loss benefit amount. The loss benefit amount is actually an AD&D rider that is built into this AME policy. And that AD&D benefit will always be 2x the AME benefit, right? So at the $2,500 level with a $5,000 AD&D rider built in, this product will be $6.30, no matter the age of your client. So it is truly guaranteed issue, one price, flat across your client base. So again, a really affordable option to help smooth out some of those, I think, key risks that your clients are going to have, whether it's major medical or otherwise, and really provide them some protection related to accidents that lead to the need for inpatient care or outpatient care. You'll see that there are a schedule of kind of things that are covered here. There's a whole host of inpatient benefits, but what I really like about this product is that there are outpatient benefits included. So you have if we take the example of a client that's in a car accident that leads to surgery that then requires physical therapy and follow-up doctor's appointments and follow-up MRIs and x-rays, you'll see in the outpatient benefits here that there are reimbursements and coverage for physiotherapy and PT, MRIs, x-rays, imaging, physicians' offices for follow-ups, non-surgical. So again, I think this is a really, really valuable piece of coverage. When I think about the AD&D benefit, to me, that's a free final expense policy that I would be able to offer my clients, right? And I think at, even at the high end for a $10,000 AME benefit and a $20,000 AD&D, the fully loaded cost is going to be $1,351, no matter the age of your client. So those are the product details. I will pause there for just a moment. In the event that folks have any questions, please drop them into the Q&A or the chat if you do have any at this point. Nothing so far. Okay, great. So I'm going to pause. I'm just going to pause my share for a moment here. And what we're actually going to do is pause on the materials, and I will come back to those. But I'm going to go ahead and show everybody what the enrollment platform looks like for the new full suite of products. So, our focus on creating insurance products is simple, streamlined, easy to use, easy to understand. That is exactly the same philosophy when it comes to building technology. Easy to use, easy to understand, and it should be simple and straightforward. And so I think what you will find as we start going through the producer portal is that we have really tried to do that when thinking about enrollments. So for folks that are appointed in place business, this should be familiar to you. This is going to be your producer portal. I'm not going to spend time walking through each component, but rather just call out the two ways to place business and then walk you through an actual application here. And excuse me for just a moment. Apologies. Give me one moment and we'll pick right back up. All right, sorry about that, folks. My computer was having some technical issues. Hopefully everybody can still see my screen. So as I mentioned, we're not going to go through every component of the producer portal today, but rather I'm just going to talk a little bit about how to place business and what the enrollment flow looks like. So as a reminder, there are two key ways that you can place business on the producer portal or the Liferaft platform today. The first is going to be utilizing this blue button that I'm hovering over called Start an Application. This is really going to be your way to enroll your clients. So I think of this as when I have somebody sitting down with me or I've got them over the phone, they're interested in the coverage, I'm going to utilize this button right here. You've also got this referral link. Now the referral link is unique to you as a producer. You are free to use that on your website. You can put it into marketing materials or emails. What this referral link is going to do is it's going to allow your clients to self-enroll. And because that link is unique to you, it's going to ensure that any applications that are started or completed by your clients will show up in your book of business, right? On your producer portal, and that we'll be able to tie that back to your book of business as we start to pay commissions. So let's go ahead and jump right in and start an application. Again, for folks that have written policies, this is going to look similar, but a little bit different now that we've included more products into this enrollment flow. So one thing to call out here, the enrollment flow that we're going to go through, or the application flow we go through today, actually looks exactly the same as what your clients are going to see, with one small added step, which is this step right here called name an application. And I think of this as just your internal naming convention for you to be able to come back to an application in case you have to pause and come back later. So I'm just going to name this my client name. Now, guaranteed issue products, age rated, tobacco use rated, means we only need 3 pieces of information to show either you or your clients what options are available to them. And those 3 pieces of information are right here. We need their date of birth. We need the state that they live in. And then we need to know whether they are a tobacco user. So say no, and we'll do somebody that is 35 years old. And I'm going to hit view plans and pricing. And that's going to pull up this page where you have the ability to make the product selections for your client. So the first is the accident plan. As a reminder, you can go individual. You would just toggle to family right here by clicking on this button if you wanted the family options. There are a few quick facts for folks that are going to be sending their clients here that really explain the coverage. And then all you're going to do is select which option you would like, or you can hit no thanks. There's also this link down here, just so everybody knows, the summary of benefits. If you click on that, that's actually going to open up the Liberty summary of benefits PDF that you will be able to provide to your clients. So let's go ahead and select $5,000 AME. I'm going to, as you can see down here, critical supplement is next. I'm going to click on that. That's going to pop this open. Again, I can select individual, family, individual and spouse or children. We've got our quick facts, 3 tiers, 10, 20, $30,000 benefit. I'm going to go ahead and take the basic plan at $935 a month for $10,000, summary of benefits. And the last one is going to be my hospital supplement. Now, you'll see here, Alabama is a state where the AIG product for hospital is approved. And so that is what is shown here. We'll go ahead and say, I want the preferred plan for $350 a day at $879 a month. And as a reminder, there are non-insurance services that can be added. That is commissionable premium if your clients are adding these non-insurance services. I'm going to leave them off for now and say no thanks and go ahead and submit my selections. Now, this is an opportunity to just go ahead and quickly review the product selections that you have made for your client. Again, as We did AME or the accident at 5,000, critical at 10,000, and hospital at 350 a day. My total is 2712 per month. So I'm going to go ahead and hit next. And this is where you're going to enter in your client's information. So we're going to start with the name. Name and email. Email is required for clients. The reason that it is required is that's actually going to allow your clients to create a Liferaft account. They're going to log in. They'll be able to see their proof of enrollment documents, their policy documents, and then actually be able to go ahead and file a claim utilizing their email. I'm going to hit next. And the next piece of info we'll just need is going to be a phone number and a residential address. I'm going to hit next. And now we need payment. So credit cards, debit cards, bank transfer are all accepted. I'm going to go ahead and create credit card and put in the credit card information. Whoops. All right. And hit next. And that's actually it, right? So all of the information that is required for an application is now complete. From here, what you have the ability to do is just to review everything to ensure that it's correct. We've got the information for the client, and then we've got the plans that you've selected, as well as what is going to be billed in the total amount. One thing I'll call out here, you'll see these blue edit buttons. What this allows you to do is actually go right back to that step that you are trying to edit, so that you don't have to go back through and complete everything over again, but rather you can just jump back to that screen, make the change, and it'll bring you right back to this reviews page. So everything looks good here. When you hit next, what you'll see is they're going to be, because we've got AIG and Liberty Mutual, we're going to see 3 more screens with terms and conditions, and then our application is done. So really only takes a couple of minutes. We do have a replacement in the state of, or a replacement question in the state of Alabama. I'm going to go ahead and say I want postal mail document delivery for AIG. Hit next. I'm going to agree to my terms and conditions for AIG on behalf of my client. And then I'm going to agree to my Liberty Mutual terms on behalf of my client. And you'll click, and then you'll see down here, it says enter your name. This is actually your client's name, and we help remind you here. So I'm going to put my client's name in, and I'm going to hit next, and we are actually done with an application for 3 products. So from here, when you hit submit application, you're going to be brought back to your producer portal. And your client is going to receive an email that says, hey, your agent, and your name will be in that email, just completed your application for Liferaft coverage. Go ahead and click on this button to get your account set up so you can track its progress. So let's submit an application. And you'll see that I'm brought right back to my producer portal. And I just want to show everybody very quickly the application summary. If I go ahead and hit view all, this is going to show me an application by application view of my pending and completed business. I'm just going to sort by the date here. And you'll see here, this is the application I just completed. And if I view details, we enrolled the client in accident, critical illness, and hospital. So that's the portal, and that's how you place business. I think pretty straightforward. You know, it should only take 2 to 3 minutes to write a policy or an application. You know, and then I think it's simple enough where that referral link is actually manageable for your clients to self-enroll. And again, they're going to see that same application flow. Great. So I'm going to jump right back over to our materials, and we'll talk for a few minutes about customer use cases where we've seen success with certain products and certain bundles of our products together. I know it's about 10:43 Pacific time, and I want to save a few minutes at the end for questions. So we'll go through these relatively quickly. There's a lot of text here, but don't worry about reading it. I'll walk you through each of these. So when we think about the first customer use case or first bundle that I think there's a lot of value in, it's really for those clients that have a bronze level plan, right? So when we think about the profile of somebody that is going to be enrolling in a bronze level plan, they are oftentimes looking to minimize their cash flow, right, or their monthly expense. And it's also likely that a lot of them are going to have lower kind of liquid cash savings, right? So they're looking for the cheapest coverage available. But the reality is that if something were to happen and they had to pay that out-of-pocket expense, they may not have enough liquid savings to be able to cover a lot of those that, if they get hit with their deductible or their out-of-pocket max for one hospitalization or one critical illness diagnosis. So, it's also possible that these clients are low utilizers of healthcare, but if they then need it, if it's really expensive, it's going to be hard for them to meet all of those requirements given their low liquid cash savings. And so when thinking about where the products can be most valuable and what level, the bundle that we've seen work and we think is the right one here is going to be a $7,500 AME benefit policy. The base hospital indemnity, if you're in a non-AIG state, or $500 a day on the AIG product if it's available in your state, with a $20,000 CI and the HSA. The HSA is going to be useful, right? So why is this the right bundle? The HSA is a way for you to offer your clients a pre-tax savings vehicle so that when they do utilize healthcare, they're able to use tax advantage funds to do it, right? But also give them access to cash pay so that they're not having to utilize their HDHP. The $7,500 AME, that coverage is going to come close to 100% of any out-of-pocket max for people that are on high deductible health plans, right? You could even think about bumping that AME up to the $10,000, but you could look at $7,500. That's going to get you pretty close. It's going to keep the cost low and really help shore up that out-of-pocket potential exposure related to an injury-related hospital stay or need to utilize healthcare. Now, why $20,000 critical illness policy? If you remember, I mentioned we'll talk a little bit about rules of thumb. One thing that we've heard from a lot of folks that offer CI today, and I think is a really valuable way to think about what's the right level of coverage. A $20,000 CI policy is going to come, for most, again, HDHPs, it's going to cover two years of an out-of-pocket max, or maybe even a little more than that. And so 20,000, that your client's covered for those 2 years. AME, it covers accident-related hospitalization. And the hospital plan is really I think, cost-effective way for them to help reduce or defray some of those costs related to sickness if they end up in the hospital. And Patricia, I see your question. I'll plan to answer it right after we get through these. Bundle number 2 is going to be very similar to what we saw in the last one, right? So I know there are a lot of clients out there that don't necessarily have major medical coverage, so they're not buying bronze level plans off an exchange. They might have a mech. With these clients, I think what a majority of them are looking for is the cheapest way to have compliant and some type of healthcare in place, right? They are typically going to be cash flow constrained. As a result, if somebody is cash flow constrained, they're also likely going to be liquid savings constrained. But I think with this client, they're really looking to minimize that monthly cash flow burden. But they are also highly at risk if something bad happens. And so when thinking about the bundle here, the focus is really giving them that coverage, but doing it in the most cost-effective way, right? So when I think about somebody that has a mech today, I think if their primary decision-making factor is how do I keep my costs on a monthly basis as low as possible, then they should look at the $2,500 AME, the base hospital, and a $10,000 CI policy, right? So this is a low-cost way to help reduce some of the burden that they are going to face if something bad happens and they need to utilize healthcare. This isn't going to cover 100% likely of their out-of-pocket costs, but it is at least going to help them. And it's going to help, again, hopefully reduce that financial burden that they will have. So that's bundle number 2. Bundle number 3, the young family, right? So young families, people that have young kids, they are often going to be high utilizers of healthcare because their kids are accident prone or they're playing sports and things happen, right? So I think the family's healthcare spend is mostly going to come from both routine, but also surprise visits due to the children. And the focus here is really going to be for the family, how do we reduce that out-of-pocket exposure because we're going to be high utilizers, but also we want to make sure that if something really bad happens, that we're not pulling money out of our savings if we have it, or similar to our other customers, that we're not left holding the bag for an out-of-pocket max when one of the parents is diagnosed with a critical illness. And so the focus here is really a 3-product bundle, especially if they're on the high deductible, $10,000 AME, $30,000 critical illness, and the HSA. So why the highest level of AME? It's going to cover accident-related hospitalizations, right? Kids are going to have accident-related trips to the ER or accident-related hospitalizations, or they're going to break bones playing sports. And so getting that $10,000, offering your client the $10,000 package really is going to help shore up the exposure from that potential use of healthcare. The 30,000 CI, this I think at the highest level is going to offer a lot of financial, a financial cushion if a parent, or even if one of the kids, if you look at the family plan, is diagnosed with a critical illness, where again, we know that people are going to hit their out-of-pocket max for the first 2 couple of years. And I think the HSA is a really interesting and important product here as well, because what it's going to do is when you are a high utilizer of healthcare, right, you are paying a lot of copays, you're getting prescription medication, your kids are seeing doctors frequently. The HSA is going to give you, again, a tax advantage way to be able to pay for a lot of those routine care and services. And also when it comes to imaging, right, I broke a lot of bones when I was playing sports as a kid. If my parents had a high deductible health plan at the time, those MRIs and those x-rays would have gotten really, really expensive. And so the HSA and our preferred provider partners are going to be able to offer that cash pay rate for things like imaging, urgent care, et cetera. And then very quickly, two last client kind of profiles and bundles here. The high-end client, right? So we all have clients that are buying higher tier level major medical coverage, whether it's a silver, gold, or platinum type of major medical, and they likely are going to have the resources to cover a really big medical expense, right? But I think the key opportunity here is that if I have the resources, there is still an opportunity cost to having to spend my money on a big healthcare bill, right? If all of my money is in the market and I'm thinking about saving my money, right? Or it's in a high yield savings account, having to utilize those funds to pay my major medical bill is very expensive because I am losing the opportunity to earn on it. And so when we think about the bundle, for a client like this, they're probably not going to find a ton of value from a $500 a day hospital plan payout, right? But where they are going to find value is $10,000 AME, because again, it's going to ensure that if they have a prolonged hospitalization, let's say due to an accident, that they're not pulling money out of that high yield or pulling money out of their out of their Schwab account where it's invested in ETFs. And similarly with the CI product, we're going to look at the highest level of coverage here, right? It's going to help cover that out-of-pocket cost for a client like this on a higher level major medical plan. $30,000 is actually going to cover probably more than 2.5 years of out-of-pocket, but also it's going to let them keep their assets invested and continue to grow, which, you know, especially if you think about a critical illness diagnosis, asset protection becomes even more important when something like that happens. So that's bundle number 4 and kind of customer profile number 4. Lastly, let's talk about the turning 65 client. So when you have clients turning 65, they're starting to make a pretty important health insurance related decision on Medicare or Medicare Advantage plans. Clients like this are likely going to have some liquid assets, but I think the real value here is, as most of you know, I used to be in the annuity business before I started Liferaft. If you look at the research, and we had just talked about the opportunity cost of pulling money out for that higher end client. The opportunity cost for somebody that is on the precipice or has already retired is even higher of having to pull money out of investable assets to cover healthcare expenses. We all know that the fastest way for somebody to run out of money in retirement is due to healthcare expenses. And so as we look at clients that are turning 65, there's a natural point that they're reviewing and thinking about the insurance coverage that they have. The $10,000 AME policy, again, offers them a level of protection to keep assets safe. And the CI product can be treated like a bridge. It will only be in effect until 70, but I think at the $30,000 level, clients here are going to have usually are going to have a little more monthly cash flow than some of our other customer buckets. And so you can really look at offering that CI product to offer them a bridge of coverage, because the most expensive time to have to pull money out of your retirement assets if you are entering retirement is right at the beginning, especially if something happens with the market. And so I think products like these not only are going to help them with the coverage, but there is really a strong underlying overall financial protection aspect to why these products make sense for each of these different customer bases. And so with that, those are all the materials that I've got. We've got about 4 minutes left here. So I will open it up to any questions. Patricia asked, is there a new contract we need to complete to offer these plans? Great question, Patricia. You do not need to execute a new contract. Also, everybody that is appointed, so everybody knows, the commission rate that you have with the AIG product is actually also applicable to all of the Liberty products. Thanks for that question, Patricia. Any other questions that I can help answer, feel free to drop them into the chat or right into the Q&A functionality. Okay, great. Doesn't look like we have any other questions. So I will stay on for a couple more minutes until 11 a.m. Pacific time in the event anybody does have questions. But if you don't have a question, appreciate you being on the call. If you don't already, you should get access. And when you log into your producer portal, you should start to see the Liberty Mutual products over the next about a week. And so if you don't, or you'd like faster access to it, shoot me an email. Everybody should have my contact info. And then I will make sure that you get access to it. And with that, thank you everybody for joining. Yes, Calvert asked, will this recording be sent to us or in the back office? Absolutely. I am going to, once we're off the call, get this over to our team. they'll make sure that it gets loaded up into the producer portal. So when you log in under sales tools, there is a tab in there for videos. This will be loaded into there. So if you missed any component, or you have other folks that would value walking through the webinar, feel free to send this along to them. Or sorry, just let them know it's in the producer portal. All right. Well, really appreciate it again, everybody. We're excited to be able to offer you the new suite of products, and really look forward to continuing working with everybody. Thank you so much for joining today.